Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. So welcome to this podcast episode 124, titled The Greenest Global Companies. It's presented by Investing for the Soul. Investingforthesoul.com is your site for vital global ethical and sustainable investing mentoring, news, commentary, information, and resources. And look at my newly revised website at investingforthesoul.com. Tell me what you think. Now remember that you can find a full transcript and links to content, including stock symbols and bonus material, on this episode's podcast page located at investingforthesoul.com/podcast. Also, a reminder, I do not evaluate any of the stocks or funds mentioned in these podcasts, nor do I receive any compensation from anyone covered in these podcasts. Furthermore, I will reveal to you any personal investments I have in the investments mentioned herein. Additionally, quotes about individual companies are brief. Please go to this podcast webpage for links to the actual articles for more company and stock information. Also, some companies might be covered more than once. And there are also 8 article links below that time didn't allow me to review them here. I'm beginning this podcast with one of my favorite company rankings that has just been released. It's on corporatenights.com and titled List of Clean 200 Companies Captures the Green Transition in Full Flight. The introduction is by Rick Spence. Here are some quotes by Mr. Spence. Released by Corporate Knights and California-based shareholder advocates As You Sow on February 15th, the 11th Clean 200 ranking captures the green transition in full flight, cataloging those public companies that are earning the most from sustainable sources. Crucially, it also signals to investors, venture capitalists, institutions, and individuals alike that a wide range of companies are capitalizing on new economy principles without sacrificing annual returns or opportunities for growth. Between July 1, 2016 and January 15th, 2024, Clean 200 companies generated a total return of 103.5%. Although they underperformed the MSCI ACWI Broad Market Index, which grew 114.4%, the Clean 200 trounced the key index of global fossil fuel companies, the MSCI ACWI/Energy Index, which gained only 64.5% through those years. And that's the big deal, says As You Sow CEO Andrew Behar, who co-authored the 2024 study. In 2016, we created the Clean 200 in response to investors saying, if we divest fossil fuels, there is nothing to invest in. 8 years later, the message is clear. Investors who are not tilting their portfolios toward a clean future do so at their own peril. In first place again is Apple. Other blue-chip names on the list include Tesla, number 3, HP, 5, Microsoft, 6, Daimler, 12, BMW, 16, Nissan, 36, Nike, 50, Swatch, 157, and even the iconic US Steel at 177, which recently committed to being zero carbon by 2050. Our mission is to shine a light on the heroes of the battle against climate change, notes report co-author Toby Heaps, CEO of Corporate Knights. The 2024 Clean 200 proves there are true sustainability champions out there. The key is to rigorously apply a scientifically inspired method to identify these gems. In total, Clean 200 companies earned more than $2.2 trillion in sustainable revenue in 2022, deriving on average 54.7% of their revenues from sustainable business activities versus 13.6% for their MSCI ACWI peers. The ranking excludes firms involved in industries such as fossil fuels, deforestation, prisons, weapons, and tobacco, as well as companies that engage in blocking climate policies. Leading the pack is the US, with 39 companies making the list this year. Other blooming centers of corporate sustainability are China with 23, Japan 18, and France 13, followed by Brazil, Canada, and Germany with 10 companies each. End quotes. Next up is Back to Energy with this article titled 13 Best Renewable Energy Stocks to Buy According to Hedge Funds. It's by Fatima Farouk and seen on finance.yahoo.com. Here's some of what Ms. Farouk says. We selected the names for our list of the best renewable energy stocks to buy by consulting Insider Monkey's hedge fund data for the third quarter. Hedge funds' top 10 consensus stock picks outperformed the S&P 500 index by more than 140 percentage points over the last 10 years. Beginning with number 13, Dayco New Energy Corp. Number of hedge fund holders, 18. It manufactures and sells polysilicon to photovoltaic product manufacturers in China to be used in ingots, wafers, cells, and modules for solar power solutions. 12 is Avangrid Inc., hedge fund holders 19. Anthony Crowdell at Mizuho holds a neutral rating and a $34 price target of Avangrid Inc. as of January 3rd. Avangrid engages in the renewable energy generation business in the US, focusing on onshore wind power, solar, biomass, and thermal. 11 is Clearway Energy Inc., hedge fund holders 23. Clearway Energy has about 5,500 net megawatts of installed wind and solar generation projects. Oppenheimer's Noah K. maintains an outperform rating and a $37 price target on Clearway Energy as of January 19th. 10. Green Plains Inc., hedge fund holders 24. Green Plains produces, stores, distributes and sells clean fuel. On January 30th, Goldman Sachs analyst Adam Samuelson maintained a buy rating and a $34 price target on Green Plains. 9. Sunrun Inc. Hedge fund holders 26. Sunrun Inc. designs, develops, installs, and sells residential solar energy systems in the U.S. A buy rating and a $28 price target were maintained on Sunrun Inc. on January 3rd by Mizuho's Mahip Mandloy. 8. Solar Edge Technologies Inc. Hedge fund holders 27. Christopher Souther at B. Riley Securities maintains a buy rating and a $133 price target on Solar Edge Technologies as of February 5th. Solar Edge Technologies designs, develops, and sells direct current optimized inverter systems for solar photovoltaic installations. 7. Algonquin Power and Utilities Corp. Hedge fund holders 28. On January 8th, Ben Pham at BMO Capital upgraded Algonquin Power and Utilities Corp. From market perform to outperform and placed a $7.50 price target on the stock. Algonquin Power and Utilities Corp. Is a renewable energy and utility company. 6. Enbridge Inc. Hedge fund holders 35. Enbridge is an energy company with a proactive renewable power generation segment that operates assets such as wind, solar, geothermal, and waste heat recovery. 5. Enphase Energy Inc. Hedge fund holders 40. Enphase Energy designs and manufactures home energy solutions for the solar voltaic industry in the U.S. and internationally. A buy rating and $140 price target were maintained on Enphase Energy on February 1st by Philip Shen at Roth MKM. 4. Constellation Energy Corp. Hedge fund holders 45. Constellation Energy Corp. is a producer of carbon-free energy with about 32,355 megawatts of generating capacity consisting of nuclear, wind, solar, natural gas, and hydroelectric assets. 3. First Solar Inc. Hedge fund holders 49. First Solar is a provider of photovoltaic solar energy solutions. On January 3rd, Mahip Mandloy maintained a buy rating on First Solar alongside a $196 price target. 2. Next Era Energy Inc. Hedge fund holders 58. Next Era Energy generates electricity through wind, solar, nuclear, coal, and natural gas facilities. RBC Capital's Shelby Tucker reiterated an outperform rating and a $74 price target on Next Era Energy on January 30th. And number 1, General Electric Company. Hedge fund holders 76. GE provides green energy solutions by combining onshore and offshore wind, blade manufacturing, grid solutions, hydro storage, hybrid renewables, and more. Overweight rating and a $153 price target were maintained on General Electric on January 24th by Julian Mitchell at Barclays. End quotes. This next article covers some well-known companies. It's titled Profit and Purpose, 7 Standout Stocks for the Ethical Investor by Josh Enomoto on investorplace.com. Here are some quotes on each of his picks. 1. Waste management. It's one of the leaders in environmental sustainability with a focus toward waste reduction and renewable energy initiatives. For one thing, the company owns a vast network of recycling facilities. Second, the company forwards a waste gas to energy project. Analysts rate shares a consensus moderate buy with a high side target hitting $230. 2. Next Era Energy, commanding a presence in 49 states and through its vast network of facilities, including solar and wind turbines, Next Era Energy features about 72 gigawatts of operating capacity. Rough economic conditions hurt Next Era Energy bad in the final months of 2023. However, analysts anticipate a recovery, pegging shares a moderate buy with a $69.60 average price target. 3. Costco. I don't think it's an anecdote to say that most Americans love the open warehouse-style big box retailer. But where it really shines is how well Costco treats its employees. In 2022, data from Glassdoor noted that the retailer's employees rated the business a 4 out of 5 regarding worker satisfaction. Analysts rate Costco's stock a strong buy with a high side target of $825. Number 4 is Starbucks. Appeals to modern investors by emphasizing the S component of ESG stocks. The company proudly boasts of its ethical sourcing of its key ingredients, from coffee beans to tea leaves to cocoa. In addition, its manufactured goods, from the merchandise on its shelves to the furniture in its stores, involve ethical sourcing. Also, I'd be remiss not to mention Starbucks' youth empowerment, hunger relief, and inclusivity programs, and analysts love it, pegging the shares a consensus strong buy. And 5. Visa. According to a Forbes article in 2023, Visa represents the most carried card, printing a market share of 52.8%. Lots of folks love talking about the E and the S in ESG stocks. However, governance is also a major component of holistic ethics. Here, Visa's corporate governance practices help promote long-term value and accountability to its shareholders. Part of this involves ensuring diversity and inclusion, and not just in the workforce itself, but in the upper echelons of leadership. Analysts rate shares a consensus strong buy with a $303.74 average price target. And 6. Apple. Maintaining high standards of governance, Apple focuses on a range of important issues. In June 2020, the company launched its Racial Equity and Justice Initiative, advancing opportunities for many people of color and indigenous communities. Also, Apple implements a shareholder voting process focused on executive compensation. That's one distinct mechanism to keep the company accountable to stakeholders. Overall, analysts peg a moderate buy with a $208.07 average price target. Notably, the high side target hits $250, implying robust bullishness despite a soft start to 2024. Number 7 is Microsoft. Thanks to the tech giant's big investments in artificial intelligence, it has steadily rocketed higher since the 2022 doldrums. Further, as AI becomes more ingrained into everyday life, Microsoft stands to be a massive winner. And when it comes to ethical stocks, the company may be the all-around champion. Management set out ambitious environmental targets, most conspicuously being its aim to be carbon negative. That is, it will remove its historical emissions since its founding in 1975. In addition, it's a huge player in social equity, promoting directives focused on encouraging women to participate in technology. Finally, MSCI Ratings awarded Microsoft an AAA rating, the highest rating available to organizations. Unsurprisingly, analysts love Microsoft, rating it a consensus strong buy with a $469.45 price target. End quotes. Now some other honorable mentions, not in any particular order, but time didn't allow me to cover above. 1. Title: Top 10 Solar Companies found on energydigital.com by Maya Derrick. 2. Title: 3 Solar Energy Stocks Poised for a Strong Comeback on investorplace.com by Faisal Hamayan. 3. Title: ESG Funds Bucking the Trend on famag.com by Ron DeLague. 4. Title: Became named a top socially responsible dividend stock on nasdaq.com by BNK Invest. 5. Title: Get rich quick with these 7 renewable energy stocks to buy now on investorplace.com by Ian Cooper. 6. Title: 3 strong buy renewable energy stocks to add to your February must-watch list on investorplace.com by Thomas Lavani. 7. Title: 3 renewable energy stocks to own before the election frenzy begins on investorplace.com by Jeremy Flint. And 8. Title: 3 hidden gem renewable energy stocks ready to ride a massive market wave on investorplace.com by Matthew Farley. Well, these are my top news stories with their stock and fund tips for this podcast titled The Greenest Global Companies. Now, please be sure to click the like and subscribe buttons on Apple Podcasts, Google Podcasts, or wherever you download or listen to this podcast. That helps bring these podcasts to others like you. And please click the share buttons to share this podcast with your friends and family. Let's promote ethical and sustainable investing as a force for hope and prosperity in these deeply troubled times. Contact me if you have any questions. Thank you for listening. And again, please look at my new totally revised website at investingforthesoul.com and tell me what you think. I'll talk to you next on March 8th. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY Ethical Sustainable Investing Pays tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon, and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.